First thing I've got to do is the disclaimer, of course. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right, and if you have any questions, by the way, pop them in the question box, and if I can't answer them, just pop your name and phone number, or your team's username. There's no Skype anymore. Your team's username in the chat box. Rory from Right Line will give you a call back just to answer any questions that I can't. If you have questions on perhaps, I'll show you the offers that we have. Maybe some different. You have some. Maybe you'd like to take a different length of time on the offer or whatever. But you just talk to Rory about it, and I'll show this again at the end of the webinar. All right. So this is just the SPY super system. By the way, used to be called the Compass system when it first started, and it's been improved and modified since then several times. So it's now called the SPY super system. But I still call it the SMS, the Compass SMS text alert service. This is what the text alert service looks like. It goes out on your phone, just like this, and you know, if you can't be watching the market all day or don't want to watch the market all day, this is how we send out the alerts on the high probability trade setups that we find. Okay, now first thing I'm going to cover, and this is, if you've been in my webinars before, this is going to be redundant for you, but I like to really make sure traders understand what moves the market. Right, market consists of a couple of groups. Retail traders such as us, we're these little marbles here. Right, so we're retail traders. And this big marble back here, this is the institutions. I'll tell you who they are and what they're made up of. But the important thing to understand is if there's a stock moving and it's not being pushed by the institutions, in other words, institutions are always in there, but they're not necessarily in there together. You don't have multiple institutions deciding to push the stock the same way. If the institutions are not driving this stock in one direction or the other, in other words, they're not driving the market, then there's not going to be any trend. So what you end up with is a bunch of retail traders trying to move the market themselves. And we as retail traders, we cannot move the market. Only people can move the market are the institutions, because they're so huge. So if the institutions aren't in a trade, we don't want to, as a retail trader, we don't want to be in there. Because when retail traders are in there without any substantial institutional support, what you get is you get a lot of chop and a lot of chaos in the market. You get a lot of chopping up and down, and a lot of times we've had days this week where the market it would gap up and just chop around all day long. There was no identifiable trend to deal with. So those are times where you really don't want to be trading very much. What I call them in the room is an LPTE, a low probability trading environment. That means you shouldn't be taking any trades, or if you do take any, they should be very small and very short duration. Take your profits very quickly. Those are the LPTE. You'll hear me talk about that. Now, the institutions are made up of, and most people know who a lot of these folks are. Institutions are investment banks, Goldman Sachs, JP Morgan, Morgan Stanley, the list goes on. But they're also made up of pension funds, police pension funds, fireman pension funds, state worker pension funds. They all have billions and billions of dollars to put into the market. Then you have hedge funds, and probably most everybody knows about hedge funds. There's thousands of them. They have also billions and billions of dollars. So they're another one of the entities that make up the institutions. And the last one is mutual funds. Mutual funds such as T. Rowe Price, Vanguard. You've heard of these big mutual funds. There's billions and billions of dollars in here that these institutions are used to invest or trade. Now, it's also important to understand that how most of the trades are placed with institutions. Some of them are placed by folks sitting behind desks, clicking on mice, just like we do when we're taking trades. But 85% of the trades that come out of the institutions are done through algos, with the computer programs. They're algos that are written to look for specific conditions, specific news. They look for a lot of different things, and when they find those, they have basically trades that get taken off in a millisecond. There's no way to keep up with them. But that's what institutional. This is where the trades are coming from. This is who we have to identify and what trades we have to identify that the institutions are pushing, and we want to ride those with them, and that's really what we want to do. Now, the institutions kind of an example of what I'm talking about with an algo. If you look at, for example, if you look at the FOMC, when the Fed makes their interest rate decision on Wednesday, this coming Wednesday, by the way, at 2 o'clock will be an FOMC. So they're gonna come out with a statement as far as what the new interest rate's going to be. It's going to be unchanged, going to be reduced, going to be increased. Likely it's going to be cut by 1/4 of a point this Wednesday. But what you look at, if you look at your chart and you look at, for example, the S&P 500, you look at the SPY, and right at 2 o'clock, right at 2 o'clock in 1 millisecond, you're going to see this big push of volume, and you're going to get a candle that moves way up or way down. There's a huge amount of volume on that. This is before you can even touch your mouse. So those are algos. No humans can do it that quickly, but that just shows you where the trades are coming from. And news events like that, which are at a defined time, such as the jobs report or the FOMC, if you watch a chart at that point in time, you'll see the huge flow of volume coming in from the institutions, all by algos. It's all algos that are driving that. All right, so our job is to identify when the institutions are pushing a trade and when they're not. And that's what the SPY Super System software attempts to do, and it does it extremely well. All right, so, but yeah, by the way, this market consists of a lot of retail traders, and it's really one large institutional trader. It's not really one, it's all those institutions we just covered. I'm just gonna go off topic here for just a second, or it seems like it's off topic, it's not. This is a blackjack table. That's ace, jack of spades, that's a blackjack. Couple of $100 chips. What in the heck does this got to do with trading? Well, if you're thinking about trading, or you've been trading for a while, or you talk to friends and relatives about trading, a lot of them are going to tell you that trading is gambling, right? You're just gambling. If you're trading stocks or options, you're just gambling. You can't win. It's fixed against you, and against you, you cannot win. And when I was much younger, and I was really much younger, I made my living playing blackjack as a card counter. Now, the similarities is that blackjack is a game. If you don't have a way to keep track of cards and a good strategy, it's a gambling game. You're going to lose. It's structured so that the casinos will win, just like most of the other games are. The difference with blackjack is if you're able to track the cards as they're removed from the deck, it's called card counting. You're not actually counting the cards. You're basically making a determination of what the composition of the rest of the deck is. As the little cards are removed from the deck, then the edge swings to the player. The more little cards that are removed from the deck, leaving more large cards than there were before, then the player has the advantage. And when there's big cards are removed from the deck, then the advantage increases by the house. When the deck is neutral, the house has a small advantage. So what I did was keep track of cards. I just kept track of the composition of the deck by tracking when the 2s through 7s were removed, and when 10, jack, queen, king, and aces are removed, and I could tell whether the deck was in my favor or in the casino's favor. So when the deck went in my favor, I bet more. When it was in their favor, I bet the minimum. All right, so that's basically how it's done. So trading stocks and options is very similar in that without knowing what the institutions are doing, the trader doesn't have an edge. So in essence, they're gambling, and both playing blackjack and trading require discipline and emotional control. Very, very important. Emotional control is critical when you're trading. Getting FOMO, fear of missing out, trying to do revenge trading. A lot of those things are emotional. So you want to try to keep as much emotion out of trading as if at all possible, right? But both of these things require discipline and emotional control. But the SPY Super System software that I talk about, to me, that's my card counting system, giving us an edge over other retail traders, allowing us the ability to become consistently profitable. This is the difference. That it's a methodology that we have. Basically, it's in determining if institutions are in the trade or not in the trade, and that's the main thing that we look for. Very important, right? And the SPY Super System software, in conjunction with identifying the best high probability trades, can lead to consistent profits. We can identify when a market's moving up or a stock is being bought by the institutions, but if there's several of them, we want to find the best one, the one that's got to give us the highest probability of success. So that's what the methodology that we use here does. We go into some other elements as well that I'll cover. Okay, Now in the room and on the alert service, got a couple of simple rules to trade by. We trade the best and skip the rest. Sounds easy. It's really not. You have to really find the best trades and skip the rest. And this is important because a lot of traders, a lot of retail traders, one of the biggest issues they have is over trading. They feel like they have to be in a trade all the time, right? And you don't. You know, no trade is a trade. Having cash is just like taking a trade. So we only want to trade the best and we skip the rest, which means in this particular case that the trades that we don't take because they don't meet our criteria, these are just as important as taking trades, because skipping a trade that was going to be a loser is just putting your money in your pocket, just like a winning trade is. All right, and another thing we say is our objective is not to make trades. Our objective is to make money. And again, this is meant to identify the fact that we want to have patience. We don't want to overtrade. You don't have to be in a trade all the time. We'll go a day sometimes without taking a trade, because our objective is not to make trades. Our objective is to make money. And hopefully that's what everybody's objective is here today. Okay, so we maintain discipline and learn to follow the process. Maintain disciplines means to learn the strategies that we use using the SPY super system and our other criteria, learn that and then follow it, right? That's maintaining discipline. Don't be taking trades that don't correspond to the methodology. And remain patient. Wait for these trades to come to you. I can't emphasize enough how important this is to remain patient. If you've traded at all, you know you can get really anxious and you want to put a trade on. You haven't traded in a while. You feel like you should have something on there. You got 4 or 5 trades you want to put on. Remain patient. Only trade the best trades. Okay, so as a profitable trader, profitable retail trader, we need an edge, right? We need an edge. And our edge, we have several, but our big edge is here, our SPY super system software, which tells us whether institutions are in the trade or whether they're not. That's what we look for. We're not going to be in a trade if the institutions aren't in that trade, because we don't want to just be in there fighting it out with retail traders. The second thing we use is we trade relative strength and weakness. Now, don't confuse this with RSI, which is a relative strength index. This is not. This is just simply comparing what the SPY is doing at any point in time with this S&P 500, what their chart looks like, and compare it to your stock, the stock that you want to take. Is your stock outperforming the SPY to the upside for a long, or underperforming it to the downside? Does it have relative strength or relative weakness versus the SPY? This is really important because it gives you an additional edge. Obviously, if the market reverses on you, if you're trading something with relative strength or relative weakness, it's going to hold up much better. Then we trade with the market trend if there is one. A lot of days there isn't. That would be when I call out LPTE, low probability trading environment. If you hear me say that in the room, that means don't take many trades, if any. Keep them small and take your profits quickly. And then buy near support and sell right near resistance is a very important one. This means don't chase stocks when they're shooting up or shooting down. Wait for them to come to a support level or a resistance level and enter them there. And this is a big thing for you, because if you do that, if it goes against you, your loss is going to be much smaller because it's so close to the resistance level. If it pulls back and it closes there, you get out, you take a small loss. And most of the trades are going to likely be in profits fairly quickly. They may not stay that way, but they'll be in there fairly quickly, which mentally it's much easier to trade like that. Okay, so buy near support, sell near resistance. Those are our edges. Now the compass system, or what we now call the SPY super system, it identifies the highest probability trade setups while sidestepping setups that look good but fail more often they succeed. When are the institutions in there? It does this by identifying when institutions are driving the move and when they're not. It analyzes complex trading data and displays the results in easily identifiable visual format. It's displayed in colors, which I'll show you. This visual element makes it possible for even new traders to find high probability trades. They'll know whether the institutions are in the trade or not, and you'll see that fairly clearly when I show you the charts. So again, how do we get an edge over retail traders? We're only taking trades that are being driven by institutions. I keep emphasizing this. Trading stocks that have relative strength or weakness versus the SPY or the Qs, and trading in the direction of the overall market, if there is one. All right, so again, our trades will be supported by institutional buying and selling. We take a trade and the institutions are driving it. We know we got the institutions on our side, at least for the time being. They'll be outperforming the index, the SPY, and they'll be moving in the direction of the overall market if the market has an overall direction. All right, now the SPY Super System software, let me just get a sip of water here. Okay. The SPY Super System software, it's important to understand this is the critical element in finding and trading the highest probability trades. I mean, the SPY Super System software, it's the engine that drives our results. I'm going to show you the results that we've had. As I said, we have about an 85 to 90% win rate on our trades. But this is how we do it. So when you see the results, remember to think that it's being driven by the SPY Super System software, right? The ability to identify when institutional players are driving a bullish or bearish move, and when they're absent, that's the key factor in pinpointing high probability trades. It really is, knowing if they're in there or if they're not in there. And again, that's what the function of the SPY Super System software, and it's the critical component in finding high probability trades. Very important. I do have Rightline has a YouTube channel. I'm on there every day about 11:30 for about an hour that you can come in and watch the room and see what we do in there and answer all the questions. Again, I'm in the room all day long. I'm answering questions all day long. Very rare. You're not going to find very many rooms where there's somebody in there who's doing live trading, professional trader that actually stays in the room all day and answers questions all day for you. I do take lunch, however. I just put in here, this is a video I did, the most common mistakes retail traders make. And I've made all of these. But these are the 11 most critical ones, not considering my current market conditions, over trading, trading your P&L instead of technicals. In other words, just watching whether you're making or losing money on a trade and trying to make a determination if it's a good trade based on that. Trading what you think instead of what the price says. And I'm gonna show a slide on this one. This would be for folks who are watching social media, any kind of social media, reading the news, listening to CNBC or Fox Business during the day and trying to make trades based on that. What you're doing there is you're trading what you think, not what the price is telling you. Being over leveraged, this is obvious. If you get too much money in a trade, it's a lot of risk. You're going to be nervous about that, so you can't trade very well. Not using a daily chart for swing trades. This is really something a lot of retail traders overlook. They're going to take a swing trade. They look at a 5-minute chart. They like it. They don't look at the daily chart, and the daily chart is critical. You don't trade long a stock that's got a bearish daily chart. Lack of patience, obviously forcing trades, which is kind of related to that. Attempting to pick pops and bottoms. Not waiting for confirmation to enter a trade. You think a stock should be bottoming out, can't go much lower than this, so I'm going to buy it. Big mistake. You got to wait for it to confirm that it gone back into the original trend. And FOMO, fear of missing out. Now, as far as just trading what you think instead of what the price says, this is a quote from Stephen Hawking, and I really like this one relative to trading what you think and not what the price is telling you, not what the price move is telling you. The greatest enemy of knowledge is not ignorance. It's the illusion of knowledge. When you trade something that you heard about on X or Reddit or any of the social media things, or you heard about on TV, or you just read about in a newspaper, you're trading with the illusion of knowledge. You're trading, you think you know something that you don't know. Right? This is a huge problem. And this year was a very good it was a very good example of that. Starting in April, when we had all that volatility over the tariffs going on, tariffs coming off, market was up and down violently. I mean, violently. So after that occurred, there was a huge amount of sentiment that the market should be bearish. It should be going down. You hear everywhere we're going to have a correction. We're going to have a recession. The market should be dropping. That's all you read about. Everybody was bearish on the market, right? And so they would be short. They wouldn't be buying any stocks. They'd be shorting everything, assuming that the market was going to go down. Now, if you looked at the price action, it wasn't going down. After that bounce after the tariffs, it's been in a bull market ever since then. And that was in April. So they've had this bearish sentiment now for 6 months. So not only are they losing money trying to go short, but they missed all these good opportunities to go long. And that was the idea of trading with the illusion of knowledge. They read what they thought was going to happen. In their mind, they thought the market should go down. Market should go down based on what I'm seeing here. What the news is telling me that things are bad. People are getting laid off. The job report's bad. Market should be going down. And fundamentally, you would think that. But the problem with that is that's not what the market was doing. The market kept going up month after month after month after month. And they think that they're right, so they stay in that position for months and they lose their shirt. And this is the idea of not trading what you think. Trade what the market is showing. That's all we're going to do. We're just going to trade the charts, trade the technical setups. So just keep that in mind. If you're trading what you just read on X, you're trading with the illusion of knowledge. Okay. Now on the SPY super system, we're going to go over the charts here now in a second. These are the color codes we use for them. Fairly basic. Green is going to be bullish strong. Blue is bullish trend. Red is bearish strong. And yellow is bearish trend. This is the colors code you'll see. All right. So here is a SPY super system on Thinkorswim. And this is just this is an old chart, but I just wanted to identify what's on the chart. Okay, so you can see. This first thing up here, this is this VOLD up. These are the market internals. This tells us during the day on a 5-minute chart what the overall market is doing. The whole New York Stock Exchange. Is it moving up, moving down? And that's all done by looking at the total amount of volume coming into all the trades and subtracting the amount of volume that's on the short side from the volume on the upside and coming up with the trend. That tells you what the whole market's doing. This is going to tell you if you've got a trending market or a choppy market. Okay. This is the VWAP. This pink line on a 5-minute chart is the most important line to trade off of for quick trades, quick intraday trades. It's the volume weighted average price. It's something all the institutions use. Everybody can put it on their charts. It's critical to have it on, right? The volume weighted average price. Then we have the 15 EMA up here, right? This little green line. That's another support resistance level that we use. This is what we've been using up until now for the two levels. I've added another one, the 8 exponential, which I'll show you in a minute, but that's fairly new. But this is all you need, the VWAP, the 15. This is called the pivot point. This is something the Compass system or the SPY super system puts on here, right? So those are the particular levels based on price action. These are candles, obviously. We also have these pop symbols, this blue arrow right here and pink arrows. Those are pop out of the box. Those tell you when a stock is breaking out of resistance, right? Or breaking through resistance or through support to the downside. Okay, they kind of gives you a directional. We use them a lot to get us into a trade if the other criteria are lined up. Now down here we've got, these are our main indicators. This is the actual gear. This is an oscillator, but this is a modified gear. This does not have oscillators. By the way, they look for momentum and they also look for divergence. We don't have divergence. We strip divergence out of here. This is just true momentum. All right, it's just true momentum. It's really what the institutions are doing. This is a current time frame momentum. So on a 5-minute chart, this is going to show you what the momentum is on the 5-minute basis. All right, on a daily chart, would show you what the momentum is on a daily basis. So they'll get a 5-minute chart up here. This is multi-time frame momentum. This is showing what the momentum is through multiple time frames. So what's the institutions doing across on this particular case would be the 5-minute, the 15, and the 45. If this is green, that tells us that those are all bullish right now, but the current time frame is switching and there's some bearishness coming in. So we don't have an alignment here between these two. We did back here, okay? And then this is the long-term trend, right? So this would be telling you what the long-term trend is in that particular stock, okay? So that's what the chart looks like. And by the way, when we're trading for a swing trade, we're looking at a daily chart. We need to have the multi-time frame and the current time frame aligned. They need to all be bullish or bearish. Bullish, of course, is blue and green, and bearish is red and yellow. If this was a daily chart, these would not align. You wouldn't trade this stock. But if you were trading on a 5-minute only basis, in other words, you're only going to be in this for a few candles, then this is all you need. It's a current time frame. Okay, and this is, I just put this in there. We had just added this recently. This was the market internals. So we have it here now, but here it is right here, just showing you a downtrend. All right, same things here. All right, this is also a template we produced. This is a few months old now, but for folks who want to trade just off of 5-minute charts, a lot of people like to trade futures, or they want to trade the SPY, the Qs, the IWM, but they're not in here for swing trade. This is going to be a trade that's going to last on 5-minute candles, maybe 2, 3, 4, 5 candles, very quick. Right, so this is all you need. You need the current time frame momentum. You need your VWAP, your 15 EMA, and the new one, the 80 EMA, which I'll show you. That's all you need. So you get this template as well. So if you get the software, you get this template. You also get this template, and you can switch them back and forth. But these are for folks who are just doing intraday, quick 5-minute trades. A lot of people like to trade like that, and we'll talk about that. Okay, now the updated SPY Super System chart layout, I'm going to show you here. I just did it this week. We made some modifications to clean it up a little bit and add something that's going to help a lot. And this is optimized for clarity and precision, right? The addition of the 8 EMA, which is what we put on here, provides improved signal confirmation and trade timing for both entries and exits. And I'll just show you a couple of cool jobs like that, but this is what it looks like, right? So if you look at the original one, let me just go back and show you that. See these little dots here? Those are gone. You see this big green line here? That's gone. That's the 50 SMA, 50 simple moving average, and these are trend dots. Those are gone now, right? I didn't think they did anything for us. This gives us a basic, nice, clear, concise chart of all we need to trade, especially on a 5-minute basis. This is really clear, right? So what we've got is we've got the 15 EMA right here, right? And the 8 EMA right here, it's white. The 8 and the 15 are really, really excellent pairing. They really work together very nicely. There's our market internals. Then we have the pop signals, which I told you about. These tell you about breaking out of compression, and the VWAP right there. That's all we need on a 5-minute chart to do trades. That and this right here, right? So this is the layout that we're going to be using now. And one of the things that's interesting about the 8, the white line here, when it crosses up through the 15, that becomes an entry if this is blue, which you notice it is right here. See how that the current time frame is blue? That means it's going to bullish. And the 8 crossed up to the 15. That's another, and this actually is a very high confirmation level right here when the 8 crosses the 15. You're not going to get a huge number of them, but when they do, then they do occur like that. The likelihood of a successful trade is very, very high. So that's how I'll be using the 8. I haven't got a lot into the details of this yet, but I just want you to see what the new one's going to be, because most of the examples we've got are still based on the older one, which work excellent. They work 85 to 90% of the time. But this, I think, is going to give us even a bigger edge. Okay, and just to point this out, this is NVIDIA yesterday with the new 5-minute chart layout, the 5-minute chart on NVIDIA, right? And I want you to look at the price action here. Look at the 8, right? And here's the 15 right here. You see how the 8 crosses up through the 15 right there? This white line crosses up through the green line, and you see what happens here? The institutions go from selling red to buying blue right there. This is where it comes. Not only is it, this is like the perfect trade, because the 8's coming up through the 15, right? The VWAP is right here. It's bouncing off the volume weighted average price. That's another entry level, right? And it's moving up to the 15, and the 8's cutting up to the 15. This is the perfect entry right here on this. When it goes blue, right there, you take that trade. NVIDIA, you buy some long calls, just buy some calls, and you ride this thing up. As soon as it starts to lose momentum, you get out. Notice how it went back to yellow here. This went from blue to green. This is bullish. This is your trade, and this is a beautiful trade. I mean, this is really a really nice trade. Probably options would have made $150, $200 a contract on that move right there. So this is what we'll be looking for, and the new setup is going to give us even higher clarity as far as these breakouts are concerned, or these reversals are concerned. All right, that's NVIDIA. And if you want to see it, let me just pop something up here briefly. All right, here's the actual chart from yesterday with the scans and everything built here. But here's the trade. This one I just showed you. See how it went from red to blue? See the white line moving up through the green and red line right there and going bouncing above the VWAP. Perfect trade. It's a perfect 5-minute trade for anybody who wants to do an intraday trade. It's about 6 or 7 candles, and it was very, very effective. Okay, so that's the new ones. So the other ones, new ones I'm going to show you now are the older format, because that's all we've got, because we've just started with a new one. But these all worked exceptionally well, right? So here's the SPY trade right here, based off of the older indicators. It doesn't have the 8. That's the only difference. But here we went from right here. See, we went from bearish yellow to bullish bearish, bullish right here, blue. Stock breaks above the VWAP, where VWAP is a critical level, and you just ride this right up. This was on a SPY, right? That's what it looks like. So that's what you look for your long trades. Here's another one right here. As you can see, selling, buying, moves up. All right. So there's what your layouts look like on the SPY super system on Thinkorswim for charts, for stocks, for you can do this on anything, futures, SPY, Q, IWM, commodities, anything you want. It works on all of them. All right, so this was a swing trade we took on NVIDIA. Now notice we're on a daily chart here. You see how it was green across the board, institutions buying all the way across the board. This is where we took the trade right here, right? As the stock moved up, we were looking for a compression, a pull down to a support level, and then a move up. That's where we took NVIDIA right there, all green. You can see that this was very, very bullish, but your entry level was perfect right off the 15 there. This was an SMR trade. We took another long trade. Notice that they went from yellow, which was bearish, to bullish right here on this candle. This is where we took the trade. We get in on 513, out on 515, 56% profit. So 2,000 invested, create $1,170 profit. And there's the institutions buying. Again, very key level. Also, obviously, the candlestick was nice and strong there. Okay. And this was a Wendy's trade. This was a short. On this one, we get, again, here's our indicators. So notice the institutions here, there was some buying going on. Then went back to selling. This is where we took the trade right here overnight. Just took it as it broke down through the 15 on the daily chart and get out right here on one candlestick. Really nice trade. What are the green and red bands? Up here, you're talking about these red bands up here. This level this right here is called a dynamic compression zone. And the compass system or the super system creates a dynamic compression zone. And it kind of falls in conjunction with these compression breaks. It just tells you that when a stock's in there, it's in a compression. Okay? I think that's what you mean, Dave. I think that's what you're talking about. The red and green bands. Well, okay, so this is just a little humor here. This is somebody who maybe took a FOMO trade, doesn't really have any methodology to follow, jumped on a stock. Netflix was ripping up in the morning. I heard something on the news that said that Netflix is going to jump up today, so he jumps on it, and guess what happens? It turns around, heads back down again. This is what you look like when you trade with emotion. When you trade with emotion, you're churning up inside, and it's very, very difficult to trade methodically and with discipline if you're trading with emotion. So we try to keep as much emotion out of the trades as possible. And this is kind of what you look like when you have confidence in your trades. Remember, all the trades aren't going to work. Not everything. There's no 100% rule, no 100% method. But we have an 85 to 90% method, and we're going to have confidence. We know if we have a losing trade, we're going to make up for it. We're always on the winning side of the trades overall. Okay. All right. So this is something I ended because I ran into a lot of problems with folks who would be following their P&L. They'd be watching a market and they'd trade their P&L and they'd watch to see if they were up or down money. Okay. Yeah, you'll get you'll get a recording at the end of the year. We'll send that out to everybody. You get it tomorrow or Monday. I put this in here because I found a lot of people were actually trying to define whether they were being a good trader or not based on how much money they were making or losing. So they were basing their trades on the P&L. So if they were in a trade and the trade was up $300, and then it moved down and all of a sudden they were down $100 on it. And then it moved up again and now they're up $150. And it pulled back to being up $50, they'd bail on the trade. because they didn't want to give away the profits. They were just trading it based on the P&L. Now the trade was still bullish. The criteria that was established when they entered the trade was still there, but they panicked out of it because they didn't want to have a red trade. So as soon as it got back down to $50 up, they took it off, which normally they should have probably been adding to the trade, because if they come back 20 minutes later, they see they would have been up $500. So that's why I put this in here. You have to learn the high probability criteria and strategies, and that comes before focusing on results. If you learn this and you follow the strategies, the profits will follow. If you're focusing on your P&L without having a solid process to follow, it's going to end in failure. And too many people determine if a trade is good by whether they made money on it or not. And believe me, there's a lot of horrible trades that will make money occasionally, and there's a lot of good trades that don't make money. You can't base it on that, right? You've got to have a solid criteria that you can follow, and make sure you've got the right criteria that you're using. Okay, so here's the probability trade setups that we go through. This is the first thing I look for. If I'm going to do it now, if it's going to be a swing trade, it's going to be a swing trade, which a lot of the trades are. In other words, we're going to hold it most of the day or overnight or a week or 2 weeks. The daily chart has got to be bullish to be going long, and it's got to be bearish to be going short. Please don't trade against the daily chart on anything that's a swing type trade. And then you use your 5-minute chart to make an entry. So if you like the stock long and the daily chart looks good, then you go to your 5-minute chart and you wait for an entry level, like a bounce off the VWAP or a bounce off the 15 AMA. All right. So this is critical. Anytime you're gonna do a swing trade, please look at the daily chart first. And then we trade with the trend if there is a trend. This is what we call the context. What's the market trend look like for the day? What's the market trend look like for the last couple of months? I mean, is it bullish, bearish, choppy? So this is important. On a trending day, when the market's bullish, nice bullish trending day, then you can be a lot more. You can put more money into a trade, and you can stay in the trade longer if you're in a trending market. If the market's chopping around, you've got to take smaller size, and you've got to get out of them trades quickly. Right now, the SPY super system must align. This is the one that breaks it all. If you've got a stock that looks good long, but the SPY super system does not align on your current time frame and multi-time frame momentum, if they're not either bullish or bearish together, then you can't take the trade, or you shouldn't take the trade. You're trading against what the institutions are doing, so you're adding risk to that trade when you do that. And then we trade relative strength and relative weakness, which we talked about, and then enter near support and sell near resistance. This is what you want as the stocks, and they may not be near support or resistance, but you can set an alert to let you know if they are. All right, so when these drop out, then you get the 2 or 3 choices, then you take a look at some more technical analysis, what I do, and try to find the best one of those. Okay, by looking at the option chains, etc. There's other criteria that go into that, but that's the funnel. All right, now what do we do in the room? What kind of trades are we taking in the room and on the alert service? Straight calls and puts, obviously. Straddles and strangles. This is a non-directional trade that we use. Debit spreads using weekly options expiration. Time spreads. We'll be using a lot of these this coming next few weeks. This is over earnings. This is a non-directional trade. We're not trying to guess which way what the earnings are going to do. We're trying to take advantage of implied volatility crush. When earnings are going to come out, the market makers jack up the premiums on the puts and the calls. Okay, because they don't know which way the stock's going to go. They don't know if it's going to go up. They don't know if it's going to go down, and they don't know how much it's going to move. So they jack up the option premiums on the puts and calls, right? So what we try to do is capture volatility crush, and what that means is when the earnings come out, the market makers reduce the premiums again on the puts and calls, because now they know which direction it went and how much. And we do that by what's called a time spread. It's actually a calendar spread, but it's a time spread. We sell this week's calls and buy next week's calls at the money, and we capture volatility crush like that. And then I have another strategy called the weekly ATM strategy. This is where we're selling puts every week on a neutral to bullish stock to collect premium. Meanwhile, we're also holding a longer dated, further out 4 and 6 weeks in time, a long put to protect ourselves. So we're protected to the downside. And we do credit spreads to capture premium. And I'll just talk about this for briefly here. This is a SPY super system. This is what we use, the SPY super system methodology for 5-minute. These are for 5-minute trades. These are not swing trades, right? These are just on the SPYs, the Qs, futures, or even stocks, where you're going to be in for, 1, 2, 3, 5, maybe 6 5-minute candles. That's it. It's called the SPY super system for very high probability trades. I have a strategy for it. I have a video on it. I identify them in the room when I can, but these are trades that you are responsible for. You have to pick your entries and exits because they're very, very quick. Okay. All right. Again, and the alert service is part of this. It's designed for day trades and short-term swing trades. It's not an investment setup. It's designed for traders who can't watch the market all day. You're going to get real-time alerts on the highest probability trade setups. And that means, obviously, stocks that institutions are in, and market internals are also in our favor. Okay, sometimes I'll take ones with market internals are neutral, but we'll take them if the institutions are in there. And every trade we take in the room is not going to go to be on alert. Alert is for very high probability trade setups, which I want to have enough time for the alert members to get in. So a stock that's moving really quickly that I may get in and get out a half an hour later, I'm not going to alert on, and I'm not going to alert on a stock we're taking it like a 345. 15 minutes before the close, I'm not going to alert on that because it just doesn't give you enough time. The folks in the alert service, so I'm trying to be fair for them. So there's fewer trades in the alerts than there are in the room. Okay, this is my equity curve from, I guess, this January to September, middle of September. This is the direction you want to see your equity curve go. We had a really strong July, as you can see right here, but that's through September 15th. That's based on $2,000 per trade. I have to have something to base it on, so I base it on $2,000 per trade. Doesn't necessarily mean what anybody's doing, but that gives us a baseline. Okay, we're going to talk about Heiken-Ashi candles now. Any questions before I move on to Heiken-Ashi? Okay, Heiken-Ashi candles, they look very similar to regular candles, and if you've not seen them before, this is just a graphic of Heiken-Ashi candles. I'm going to talk about these. This is British pound, Japanese yen. Doesn't matter. The candles are, this could be gold, it could be silver, it could be Tesla, it could be Microsoft, could be anything. But this is the structure of the candles. All right, let me just get another sip of water. I'm recovering from a little illness this week, so. All right. What you notice on these candlesticks right away is these candles here, these are bearish. You see the flat tops. Bearish Heiken-Ashi candles have flat tops. There's no wicks on the top of the candles, right? No wicks. These are bullish Heiken-Ashi candles. See, flat bottoms, no tails. Those are Heiken-Ashi candles to the bullish side. These are Heiken-Ashi bearish candles. That's a critical thing to remember. When you put them on your chart, you're looking for these kind of setups, so that you can find a reversal to the bullish side or the bearish side. Now also notice the candlesticks start in the halfway up the other previous candlestick. They always start at the halfway point of the previous candlestick. Every candlestick, everyone does that, right? Halfway, 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 always at halfway up the candlestick because of the way these candlesticks are constructed. It takes two, in a case 5 minutes, it takes 2 5-minute candles to create a Heiken-Ashi candle. Now, what we're looking for and how we use these. Obviously, you can see the trend. They can identify trends pretty nicely. But what we're looking for is reversals, how to find a bullish reversal. Let's say we wanted to trade this, but we were bullish on it. We wanted to trade it long. So what you're looking for is you're looking for these flat top candles to start to not be flat top anymore. See how we go to dojis here? Dojis with wicks and tails, wicks and tails, wicks and tails. Then we get a flat bottom candle right here. Okay, that's a Heiken-Ashi bullish reversal. Bullish Heiken-Ashi reversal right there, right? That flat bottom candle. Now, here's a big caveat here. When the reversal is a candlestick that size, when you had the trend formed by this size candles, that's really not the best entry for it. This is too small a candle to offset this this downtrend that has been so strong for so long. Now, you would have made money on it. It went right up here nicely, but that's not the trade I would take. what I look for is a reversal candle that's large enough to offset this trend. So I would be waiting, right? And see, we went into another bearish Heiken-Ashi reversal right here and here. But here's the bullish candle that you want. See the Heiken-Ashi reversal candle right here with a flat bottom? See how big this candle is, offsetting this? This is your Heiken-Ashi reversal entry right now. That's where you would take it, right there when this candle was forming. You take it right there, and then you ride it up. You get another one, another one, another one, another one, couple of wicks and tails, another one, another one, another one. You can see the trend. That's your Heiken-Ashi reversal right there, and this was the perfect entry for it, and that's what you'll be looking for. All right? It's important that the candlestick that's creating the reversal is larger than the ones that created the original trend. Okay, so that's something to grasp from that. All right, so again, distinctions of the Heiken-Ashi candles. Bullish Heiken-Ashi candles have flat bottoms. Bearish Heiken-Ashi candles have flat tops. Bullish Heiken-Ashi reversals are identified by flat-topped Heiken-Ashi candles, followed by flat-bottomed Heiken-Ashi candles. Okay, and you can have doji candles in between. They don't have to follow one after the other. And bearish Heiken-Ashi reversals are identified by flat-bottom candles, followed by flat-topped Heiken-Ashi candles. That's the whole criteria for Heiken-Ashi reversals. And reversals are one of the best way to use these things, because if you're coming in, you want to get into a trade, and the stock price comes down to a support level and bounces off the support level, you really want confirmation that bounce is going to last. And the best way to do that is to use Heiken-Ashi candles, because when you get a Heiken-Ashi candle off of that support level and it bounces, that is confirmation. Heiken-Ashi candles are by definition a confirmation of the bounce, because you've got multiple candles creating it. All right, this is just, again, we're just looking at what we just looked at a minute ago. Flat bottom candles in an uptrend signal a strong visual of a current trend. So this is the one we just looked at. This is how you would see it. Now, as it was coming down, let's say you wanted to go long here, and this blue line was the VWAP, for example, right? One of your levels that you wanted to use. As the prices come up here, you can see we've got the small Heiken-Ashi reversal. It's still below the VWAP. Now it breaks above the VWAP and another Heiken-Ashi reversal candle right here. This is the perfect entry right here for it. As it breaks above the VWAP, this blue line, if that was, it's not actually, but you get Heiken-Ashi reversal here, and you just follow this trend right up. You get a little pullback here, but you'd be using the VWAP as your support level. Just try it, and then look at the trend, how easy it is to identify here. And then you start to see some wicks and tails, and you're out. When you start getting all these wicks and tails and then a red when you're out of there. That's what Heiken-Ashi reversals can do for you, and finding it right at a support level. Okay, again, we just talked about that. So what's the advantages of Heiken-Ashi candles? Well, it smooths out price action, reducing noise. You're not getting, if you get these crazy 5-minute candles that are jumping up and down, and they can drive you crazy. If it smooths out that price action, you're not gonna see all that much jumpiness. So it's easier emotionally to watch a trade like that. You know, if you've ever seen a 5-minute candle that was really ugly and you were long, you notice it starts to go against you. You start freaking out in 2 or 3 minutes. This is going to smooth out the price action, reducing noise. It makes identifying the trends much easier. It improves identifying confirmation of trends and trend reversals. This is a big thing. We use this a lot for trend reversals. And it helps identify potential exits when the candle bodies shrink or the reversal occurs. These are advantages. And there's a big advantages. Okay, so I'm going to show you a few charts here. I use TC2000 as my charting program, and I use obviously the SPY super system to let me know what the institutions are doing. But this is what I use for charting. And the reason I showed you this is Uber. This is, if you want to look at this May 1st date right here, because these are regular candles, right? These are standard candles. There's an Uber right here. We're getting gaps, and this moves up, right? So this is a kind of a tough one to try to decide where you're going to get in. If we switch to Heiken-Ashi candles on Uber, this is May 1st. Here's May 1st right here, right? You go to May 1st here. May 1st was your entry on the daily chart. This was when you should be getting into the trade. You see the Heiken-Ashi reversal? See the pink candles with the flat tops? I draw my candles in TC2000 pink and blue if the Bollinger Bands are expanding. In other words, compression is breaking. But these are actually red and these are green. So here you have the flat tops. This is a bearish Heiken-Ashi trend. This is a bullish Heiken-Ashi reversal, May 1st. So that's where you would take the trade right there on May 1st. And here's your trade. In here, boom, 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 and out right up here. There's your trend. This is how you trade that. Now notice something. Gaps are gone. No gaps on Heiken-Ashi candles, right? There's no gaps on Heiken-Ashi candles because it takes 2 candles to make a candle. So that's an kind of an indication of how you would trade that. But look at how nice. If you were using Heiken-Ashi candles here, you may not want to get in because it's gapped up so much. But this tells you to take it. Okay. All right. So those are Heiken-Ashi candles. I'm going to look at some live ones, and I'm going to look them on TC2000, and I'm going to look at them on the SPY Super System platform. All right. So I've got a few that I'm going to look at. So let me bring up the SPY Super System over here. All right. Now we're going to be looking at these reversals as daily charts, because I want to look at these would be like a potential swing trade. All right, let me just move this out of the way so that we can. These are scans, by the way. This is we have several different scans. This is a cascading up scan. This tells you stocks with relative strength on a 5-minute, or you can use one. It has one for a daily. Cascading down, relative weakness stocks on the 5-minute on the daily. And these are swing type trades we were looking at for potential long swing trades. All right, but let me back that out of the way so we can look at the chart a little bit clearer. All right, so here's NVIDIA right here. And here's NVIDIA. Now these are Heiken-Ashi candles here. What you do is you switch here. I go here to chart type. It says candle or Heiken-Ashi. I use it Heiken-Ashi. So these are Heiken-Ashi candles. You see what I'm looking at in NVIDIA? See this Heiken-Ashi reversal right here? It's got a wick and a tail and a flat bottom. And notice that the institutions on the current time frame momentum, which is daily, have just switched from bearish to bullish. All right. And the multi-time frame is also bullish already. It's green, right? This is where you would enter the trade right there on NVIDIA. That would be a trade to take on Monday if it opens green, if it trades green. You know, you give it a little bit of time. All right, but that shows you what NVIDIA looks like, right? So that's a bullish Heiken-Ashi reversal, right? And we also have about AMD. All these chip stocks are really strong. Here's another one in AMD. Green. Now this is even stronger. See all the institutional buying on this across the board. Breaking out of this compression. See this compression level right there, right? That's AMD. FTAI. Okay, FTAI also has a Heiken-Ashi reversal candle, right? But look at the institutions here just coming into it on the multi-time frame and on the current time frame. So that's a potential long right there in FTAI. And I'm going to show you these in TC2000 in just a minute, because again, I use TC2000 for doing more deep technical analysis. And MU is another good one. And a lot of these are the chip stocks were up a lot yesterday, but there's another one in MU, very, very strong. A nice breakout on this thing. A really nice trade to take right there. Do you need to get TC2000? You do not. No, you don't need to get TC2000. All you need to trade this stuff is the SPY Super System. I use it for going into deeper technical analysis, and I do show TC2000 during the day in the room, but you don't need it. No, it's a charting program. Some people use TradingView, a bunch of other ones, but I'll show you. So this is a SPY Super System on MU right here. Look at a couple of shorts as well. Even with the market making new all-time highs, there was some good short setups. This is Willis Towers, WTW. Notice that how the institutions have been selling this thing for a while here, but it's breaking down with a Heiken-Ashi reversal right here now. It was one back here that you could have taken. Here's another one right there. All right, that's Heiken-Ashi reversal on WTW, and it tells you that it's short is fine. It's bearish on both the current time frame, multi-time frame on the daily charts. O'Reilly's one more short. There's O'Reilly right there. Heiken-Ashi reversal right there, heading down. That's another good short. Notice the Institute SPY Super System telling us these are all good shorts. If they aren't, then we don't take it. Right? Here's BAH. Also just turned short. See, we went from buying to selling right here, and it was already selling on the multi-time frame. It's another good short. Now we'll do VC. Okay, another good short. right? Another good short setup. So these are all good short setups based on Heiken-Ashi reversal candles, okay? And hopefully that you can see those very, very clearly. Now, on 5-minute charts, as I showed you before, most of the 5-minute charts, if you're doing intraday trades, and you're not really worried about the daily chart, you're just worried about the 5-minute chart and how those are going to look. Okay, let's move back to the presentation. All right, so those are some Heiken-Ashi charts. Do we have any questions here? Does the SPY super system work well in all time frames, such as 2-hour? Yeah, it works. It works. Typically, I use it on the 5-minute and the daily, right? Because those are the key ones. But a lot of people, I think, use it on the 1-minute, 2-minute, etc. When you're talking about 2-hour and 4-hour, yeah, I'd have to look and see if it actually works on the 4-hour. Let me try something, because it's calculating, it's putting in an awful lot of information. So Lisa, that's daily. Let's see what we got here. Here's what the time frames it works on. It works on the 15-minute, 30-minute, the hour, 4-hour. Let's see what the 4-hour looks like. Yeah, I'm not sure if it's going to come up with all the things on the 4-hour. I don't think it does. But if you're just interested in the current time frame, you're going to get that. But the problem is it's got so much data that it has to collect that it's limited to the number of time frames that it uses. But I'm using the 5-minute and I'm using the daily. I think it also works on the 1-minute. Yeah, it works on the 1-minute. In the daily, in the yearly. But that's how it's used. Depends on which time frames you're using. I only use, like I said, I use the 5-minute and I use the daily. That's it. That's all I need. I don't need to get into 4 hours, because I'm looking at what the institutions are doing. And remember, when I'm looking at my 5-minute chart, I'm looking at the 5, the 15, and the 45. Right. So I'm looking across 3 different time frames on the 5-minute chart. I'm not just looking at the 5-minute. The multi-time frame has already included that. And what it's looking at is looking at the momentum on the 45-minute and the 15-minute and the 5-minute, and it's looking to see if the momentum is bullish on all 3 of those. Okay. Can the SPY system work with my Ninja? Does the SPY system work on NinjaTrader platform? The SPY super system does work on Ninja. Yes, it's called the money flow tracker over there, but it uses the same. It looks at the same things. It's looking at momentum. It's looking at money flow, etc. Some of the settings are going to be different. Some of the indicators, because it looks different on Ninja. Ninja looks different, but it does run on Ninja as a money flow tracker, and it tracks the same exact thing. Most people use Ninja for futures, so it's obviously the trades are a lot quicker generally. Okay. All right, so what I want to do now is we've gone over the Heiken-Ashi candles. I've showed you the SPY super system charts with the brand new one that's got the 8 in there, which is really going to be effective. I think it's going to really increase the 5-minute trades dramatically. And you also, on the daily chart, it's very important as well. All right, so here we go with the results. 2023, this was assuming $2,000 put into each trade that we took in the room. All right, so in 2023, it produced about 60,000 in profits, about 5,000 a month if you put 2,000 into each trade. All right, just the trades that we took. In 2024, we did about 55,000, $4,581 a month, with 2,000 into each trade. And a lot of the results you'll see annually, a lot of it depends on the market that year. How much trending days do we have? How many choppy days we have? Because the amount of profit you're going to make a lot of it's going to depend on what kind of market you're trading in. But that was 2024. 2025, this is just through September, using 2,000 per trade, up 47,765, up 4,300 per month so far. Actually, this is our best month so far, best year so far, 5,300. All right. But again, you're going to have winning trades, losing trades, but this is what we get for this through this September this year. Okay. I kind of want to point this out. If you remember back in April, when they put the tariffs on, the market collapsed and they took the tariffs off and the market bounced back. These are the trades that we had on during that period of time, right? 328 to 42. We only had 4 trades on These were in the room and on the alerts. We had all these on the alert service. So when the SPY was down 10%, it was down over 10% in 2 days. We had Broadcom, AVGO here. We got in at $75 and got out for 104. So that was a 39% profit. Nike, we got a little lucky on Nike. We had Nike short. We were short all of these. We get in for 285 and we closed it for $9, 216% profit. And this was because the tariffs hit Nike really, really hard because they produce all their products in Vietnam. It was supposed to be a 39% tariff in Vietnam. Down it went. So when that gapped down like that, we took it off immediately. One of the sayings I have in the room, by the way, is gaps are gifts. What I mean by that is, if you're in a long stock and it gaps up in the morning, say you get a 3 or 4 or 5% gap up in the morning, take the profits. Gaps are gifts. You take the profits if you get a gap up on a bullish stock or a gap down on a bearish stock, for 2 main reasons. First of all, when a stock gaps up, it can either keep going, it can go sideways, or it can go down. That's a pretty simple way of doing it. But if what the stats show is the least likely thing for it to do is continue up right then, right? It most likely is going to move sideways and move down. So you've got 2 things going for you. You're taking the profits right above at the high, and when a stock gaps up, the implied volatility in options gets raised a lot. So you're getting out at a price that you wouldn't get if you waited 10 minutes, because the implied volatility is going to reduce the cost of the premium. All right, so that's gaps and gifts. All right, so we had Nike, we had Sarepta in at 450, out at 8, 78% profit, and NNE, we're short that, in at $1.80, out at 225, 25% profit. This is more normal for what we usually get, 25, 30, 35%. All right, but I just wanted to point that out. All right, so these are the trades I did in June. I was on vacation for about 2 weeks, so I didn't take a lot of trades in June. We had 11 trades, 10 and 1, produced about 37.90. July, a lot of trades in July. I guess I come back from vacation, I was running a trade, but these are all high probability trades, and we do have losers. You can see we had losers in here. There were always going to be losers, so keep that in mind. But one of the things here is you notice the percentages, 40, 20, 32, 52, 21. This is what you're going to see normally. These are the kind of percentage gains you're going to see under most circumstances. You got 166, that was a little bit of an outlier. VST, we had a news event that knocked that down. Couldn't do anything about it. But again, here's the percentage gains that we took in July. July, we had 30 wins and 3 losses. This is very difficult to do. 30 and 3, 91% win rate that month. 2,000 invested in each trade, produced 16.8. This was a really big month for us in July, but that's again a pretty hard number to hit every month. 91% is pretty high. August, we were 20 and 4, 84% win rate, produced 59.60. And September, this is actually through the whole month now, I think, so it's the first 3 weeks. 21 and 4, 84% win rate, 47.44. All right, so that was September. So that's where we were. Now I'm just going to show some of the results from 2024. But the only reason I want to show you this is you see the win rate stays about the same, but I want you to see the percentage profits that you get are about the same. They stay in a fairly tight range. You're not going to be getting 2, 3, 4, 500% profits on your trades. That's just not practical. And I know you hear that a lot. That people turn all this amount of $5,000 into $100,000 in a couple of weeks. You don't do that by following any kind of methodology that's going to work consistently. All right, so there was January. There's February here. Again, 92%. Very good month in February of 2024. 11.7. Again, see the percentages across the board here. They stay around the same. We had alerts trades that month too. I don't break these out all the time, but we were 20 and 2, 69.30 in the alert service. Is May. Time spreads, these are things that we did over earnings. Again, you can see the percentages. They don't change an awful lot. In June, 25 and 4. July, 22 and 4. Win rate staying about the same. August, here's my losing month last year. I want to clear. Sometimes we'll have a losing month. It's not very common. We've had one in the last couple of years, this one here. Again, 8 wins and 5 losses, 62% win rate. You know, for me, that's an embarrassment. But it is what it is. I can't do anything about it. There wasn't an awful lot of trades. You can see we didn't take a lot of trades. There weren't a lot. We were fighting a very difficult market. Only lost 1786, and the alert trades lost 295. But in October, we bounced back with 17-3 and bounced up to 74.48. So there's your loser 1786, followed by 74.48 in October. And the results the alerts were about 6,063. Okay, so I won't go through every single one of these. This was I wanted to have, when I do these, I like to have records. Everybody asks me, what are you doing this year? Again, we went through most of these, but here's January 84, 89, 83, 85. These are our win rates for this year so far. Okay. Now, I want to talk briefly about the alert service, just so you know what it is when you get on the alert service. This is how the alert comes out. The first alert you get, it has the date, it has the stock symbol, is Nike. It tells you to buy the April 11th 67 put. So April 11th is the expiration date, 67 is the strike price, and it'll say buy them for 285. That'll be the whole alert. Then you'll get another alert once we decide if we want to have a sell order on it. So you get the same alert followed by the word sell order for $9. And so you put an order in for $9, and then you'll get the last alert. They were sold for $9 on April 3rd. Okay, so that's what your alert service looks like. That's what you get each one of these trades. And if this was modified from $9 to $8.50, you would have had another alert to tell you to move it to $8.50 and try to give you as much detail as possible on these things. So that's what the alerts look like. All right. And this probably is unnecessary now. How do we achieve such stunning results? I've been through this already. We are able to identify when institutions are in driving a trade and when the market internals are heavily bullish or bearish. So we only take those trades. We trade the best, we skip the rest. I will say that I do take some stocks, some trades that the institutions are in if the market internals are neutral. Because you get a lot of days when the market internals are neutral, the market's just kind of chopping, so you're not having a trend. But I'll take stocks that have institutions in them on those kind of days. Okay? And how does it do this? We've talked about this. Momentum is the key thing here. Multi-time frame, current time frame momentum, very, very critical. Again, this momentum we have the divergence stripped out of. Momentum is very, very important. And then we took trend, and there is some money flow analysis goes into that. But that's how the system is finding these things. Again, we've seen this one before. This was the chart that we're using up until this past week, right out of the 8. So you remember these. I've told you this, showed you this earlier. VWAP, 15 EMA, pivot point, and you pop out of the box symbols right here. Again, long-term trend, multi-time frame momentum. This you use in combination with current time frame for swing trades. You only use current time frame for trades that you're taking for just a 5-minute basis. All right. Anybody who's trading futures, this is what you would use: current time frame momentum. Again, here's the one for if you're just trading for 5-minute charts. This is what you can use. All right. So this was a SPY super system. Heiken-Ashi reversal entry right here. Now, and I'm just trying to point out how you use these charts, how effective they are. Here's the VWAP. Here's the 15 right here, the red line. You see, we took the trade right here. You see what happened down here? The current time frame momentum. Institutions buying, institutions selling, right there. This is where you take the trade. It was a Heiken-Ashi reversal. See, we got a wick and a tail, a flat top. Take it right here. We just follow this down. As long as it stayed below the 15, we stayed in the trade. Right? It just stayed in the trade, and I don't even know how long this one went. But this was a long, long trade. Very rare to have this much of a move. But that's the setup you look for, and you just stay in it until it goes above the 15, or until you've had taken enough profits. Okay. Do the existing members get the updated charts? Yes, they do, Arthur. Yeah. Anybody who owns a SPY super system will get the updated charts. They have them there now. You can ask for them and just tell them you want the new chart. They'll send it to you. That's the dashed line in arrows. The dots here. These are These are trend dots. These are gone from the new layout. I got rid of those. I don't use them. The arrows, these are what's called pop symbols, the pop out of the box symbols. These are identify a compression break. See how the stock compressed here? That's a compression break. That's telling you that the stock has broken compression to the downside. And then we have pink arrows when they do compression to the upside. And it actually helps in order to take a trade if you want to. If you hadn't been in this yet, although we took it right here. If you hadn't been in this yet, you could take it right here on this pop out of the box because it's showing it's kind of coming out of compression. Right? I saw it here because it looked like it was coming out of compression, but this told me that it was. So that's how you use those. Okay. I'm going to cover the SPY super system real quickly. This is the trades that I took using 5-minute charts for the SPYs, the Qs, the IWM, using the SPY super system. Right now, these are trades that I cannot post in the room and I cannot alert on because they're very fast. These are 1, 2, 3, 5-minute candles, very quick. But these are the results that I had using this, and I have a video on exactly the criteria that I use, which I'm going to be updating to include the 8 in it here in a minute, in the next week or so. But these are the trades I took starting back in a year ago, July. This was July 2024. So you can see the number of trades you take are pretty high, 56, 6, and 2, because they're on 5-minute charts and they don't last a long time, right? So, and these are very profitable. These are 2,000 in each trade, but these are my results. All right, everybody is going to have different results because each trader is responsible for their own entries and exits in these things. They're very quick, you know. And again, you're only going to have one of these on at a time, and it's going to be short duration trades. And you know, you can go in there and put an OCO in, you know, one cancel the other if you want to. Typically, I follow them and trail them down if they're going in my favor. I use a trailing stop and just get out like that, right? But this is the result. You can see the percentage gains are extremely high. Dollar gains is really high, but these are my results. Please don't think that I'm showing you anything that the room members got because I don't know. I know a lot of them do very well. Do those show in the trading room? These don't. I can't post them. They're too quick. Now I will identify them. I identified a couple of them yesterday. I'll say there's a SPY super system set up here, and then I'll say I'm taking it, right? But I can't tell you how much I'm getting in for because it's so quick. These things move very fast, but I will tell you when they're setting up. But remember, I'm working a room with a huge number of people, with a lot of questions, a lot of people looking for different trades. Meanwhile, I've got people in the room who are just doing SPY super system trades that are killing it in there because they're watching. That's all they're trading. So I can't post them or put an alert out on them, but I can show you when I see one setting up, I do that. Okay. Again, this was more SPY super systems. This was just in October 2024. I just compared the SPY super system to the trading results in the room. Again, if you're in the room and you followed all the trades, this is what you would have made last October at 2,000 per trade. But these are the SPY super system trades. Now, these do not include each other. This is completely separate from the trading room. But these are the trades that I took. All right, 4,800. This is the trades that I took in the SPY super system. They're very quick trades, right? But they have a very high profit factor, very high profit factor of about 4.3. All right, and it's November, December, and then the last quarter of last year. We just put this in there to show how effective it was. But again, the room trades is what you would get. The SPY super system trades, I just want to show how effective these things are for folks who can learn that strategy and like to trade like that. These are fairly quick trades. You know, they're not something you're going to sit in and hold all day. Okay. All right. So again, let me just show you a few SPY super system trades again, just so we can emphasize the setups. This is off the one without the 8 on it. This is the original one, but here you're looking at, here's the current time frame momentum right here. Right. This is all we're worried about. 5-minute trade. You see how it was red and went to blue. Institutions came in right on that candle. See how I took it right there as it went above the VWAP. See the VWAP right there in the 15, the little red line pops right there. This is where you take it. Institutions buying. You ride this thing up, ride this thing up, ride this thing up. I get out right up here. All right. So this was a pretty nice trade. $220 profit per contract. That's a lot. Don't think that that's an average trade. It's not. Most of the SPY super system trades per one contract are going to produce somewhere between 5 70 and 140, 150 bucks because they don't last this long usually. But the downside is very limited. Can you imagine if you got in here, right, and then the next candle closed down below the VWAP, you're out of the trade. So your loss is going to be fairly small. Right, here's another one here. This was a very quick trade, in here, out here. Again, we took it as a compression break. See the pop out of the box symbol right there? We take it there, and we get out right there in that candle. That was a Heiken-Ashi candle. Here's the same thing. This was using the new format here. Not the new format, but the modified format that just shows the current time frame momentum. Again, you can see it went from buying to selling right there. Take it here, get out right here on this big tail. It was still bearish, but I'm not gonna stay in it here. I'm not gonna wait for it to reverse. So. All right, this is again another one off that new methodology. So this just shows you for anybody who's interested in the SPY super system trading on the 5-minute basis, this is the chart you would probably want to use right here. Okay, and there's just some more of these. So I'm just going to show you them, but I think you can see the setup. Obviously, it was bearish, all red, pops out of the box here, right here off the VWAP. You take it right here. This is an older trade. You notice I didn't even have the oscillator down here at the time. So there's a trade right there, and there's the pop out of the box, and there it goes. This is where you get out right there. Right, again, stay at red the whole way. Notice the switch to blue. You don't have to wait for that. Just wait till it flattens out, take profits. Okay, now these are some trades. These are swing trades. We set up as swing trades. These are for folks that are going to be wanting to do swing trades. Now, this is a line on a 5-minute chart because we put this on as a swing trade, but it worked out so well on the 5-minute basis that we took profits that day. So this is where we took it right here. You notice it went from buying green to selling yellow. Okay, right there. You see how it came below the VWAP with a pop out of the box symbol? This is where you take the trade, right? First, the VWAP becomes your stop. Then, as it moves along, the 15 becomes your stop because it's coming down here. Okay. Now, if you had the 8 on here, the 8 would trail you, would even be close, so you could use the 8 for a stop. But you can see how nice this worked. And we were in this thing for an hour. It was up 51%, so we decided to take it off. I didn't really see any reason not to take 51% profit in an hour. All right, so that was that one. This was URG, and this was one we had. This was a swing trade right here, and you see it went from. This is again multi-time frame, current time frame. They both had to be aligned bullish, so they were. It went from here from selling to buying, so they aligned right here. But we were in compression. This is where we took it. This is the daily chart. We took it right here on 710. And exit on 717 for 48% profit. Didn't really move very much when we first get in, but the institutions were still in there. We could see that they were still buying. They're buying, buying, buying. So we stayed in the trade as it compressed, and then we got this beautiful pop, and we took profits right there, 48% profit. NVIDIA, I mentioned this one earlier. Again, if we wait for a pullback, the institutions are buying the heck out of this thing. Wait for a bounce right there, we take it off. Right, 32% profit in 3 days. SMR. Another one that bounced off, we just took it right here as it went from selling to buying. Institutions were already buying in the multi-time frame, so these aligned. Take the trade right there. Nike, this was the one I mentioned that we had such a big profit on Nike. Again, compressing here. We took it here. This is where we took it on the 28th, right there. This is where we took the trade. And some people actually took profits here, but we stayed in it. It didn't do much, but notice the institutions were selling it. You can see they're selling across the board here. There's no indication of any institutions buying this thing. And then we got that news on the tariffs. Kaboom! We took it off. Gaps of gifts. It gapped down here. We took it right there on the open in the morning. Again, 216% profit. Notice it bounced right back the next day. Sarepta, same thing here. We took this. That was another nice one. You can see where I mean, if you're looking at this, even if you're a very new trader, when you look at these red lines like this, it's pretty easy to see that they're selling this thing. I mean, there's no buying anywhere here. So this is a bearish trade. So you're joining these institutions in that. This was HIMS. This was a long, again, buying the heck out of this thing. So this was a trade we took here that worked nicely. Kept moving up. I actually kept a runner on, made 269% profit on the runner, but I don't post that. That is not included in any of the results I have. Took 25%, that's what gets posted. Okay, institutions buying. Notice they went to selling right there on the current time frame momentum. That's a daily chart. All right, so those are the charts. That's how we use this system to make money. These are how we find high probability trade setups. And again, I use my TC2000 charts to dig deeper into technicals. But the SPY super system tells you whether the institutions are in the trade or not, and the indicators on the chart identify the entries for you. In other words, the 15, the VWAP, or now the 8. All of those become support resistance levels. Those are all places where you would take a trade if you get confirmation that the institutions are in there. But that's how it works, and it works extremely, extremely well. Right. So again, here's what we take. We mentioned these already: straight calls and puts, straddles and strangles, debit spreads using weekly options expiration. We have time spreads over earnings. Several different strategies we use because depending on the market, sometimes spreads are better than straight calls. Sometimes straddles and strangles are good because you don't know which way the market's going to go. You like a stock, but you don't know if it's going to go way up or way down. So you take a straddle or a strangle. You make money no matter what, as long as it moves enough in each direction. Time spreads, again, to capture premium volatility crush, and weekly ATM and credit spreads to bring in premium by selling puts. All right, and then of course the SPY super system, which I'll talk about in the room, and I'll try to identify them, but I can't post on those. Okay, so that's that. So that covers the SPY super system and the methodologies that we use and how effective it is. I mean, the results, I try to be very transparent as far as these results are concerned. But these are the specials that Rightline's got. Obviously, you can take this free 2-week trial, which is going to get you alert service. It's going to get you the trading room, and it's going to get you access to the videos. I got about 31 videos on here on all of the strategies that we use. And then if you can cancel, of course, anytime, but the $396 a quarter after the free 2-week trial. Right now, then there's a one-time payment. This is a lifetime where you can get the alert service for lifetime for $24.96 forever. You get all the alert service. You also get my premium, my videos on the training videos that we've got, again, about 31. But you also get the private Discord chat access where all the trades get posted, and there's other great information in there. In the Discord room, we've got 2 additional professional traders in there posting stuff all day long. And this is the one that they've got. This is really a pretty special. This is a one-time payment. This is a lifetime. You get the trading room access forever. You also get the SPY Super System software forever. Now you get the software and all the updates that come with it. You get it for life, and any updates that come. You don't have to renew. And also you get the videos, the training videos, in the Discord room. Everything for $24.96. This is kind of a no-brainer to me. Because this SPY Super System is so effective. I mean, if this makes a lot of sense. If somebody can find their way to pay for it, because this is really good. Now, if you're interested in getting it for a shorter period of time, like a year or something like that, call Rory, please, because he'll work with you on this for sure. Okay. And again, I put this in a couple weeks ago. I did a little calculation. The annual subscription, I figured $1,600 is max. That's based on the quarterly. The average trade size is about 2,000. Assumes all trades were taken. The results up through September, you're getting a 40x ROI per year. So in other words, the annual profits have exceeded 40 times the subscription costs per year, right? So I mean, it's really pretty dramatic as far as how this pays for itself. Again, ROI, simple math, proven results. That's just the kind of a return on what you expect, not on your investment, but not on your 2,000, but on the total that you paid for it for the year. You're going to get about 40 times what you paid for it, generally. Look, obviously, this past performance is not indicative of future results, as we always have to say. All right, and here's Rory's number here if you want to call Rory and talk to him about this. He'll be very helpful for you if you're interested in any of the things we've talked about here and any of these specials that we've got. He'll cover them all with you and go over into detail for you. All right. So any other questions before I wrap this up for Saturday? I really appreciate your time, and I hope that you found the information useful. I hope the SPY Super System is something that you can see how this can be a big advantage to you for your trading. I think you'll find that it'll help a lot. as well as the Heiken-Ashi candles will help a lot. Okay. Okay, so I think we have, it doesn't look like we have any questions on this. Either I confused everybody or I explained it well. I don't know which. So listen, thanks everybody for coming here today. I appreciate it. Appreciate so much you spending on a Saturday in here to listen to the webinar on the SPY Super System and the alert service. I hope you take advantage of it. Hope to see some folks in the room on Monday, and have a great weekend, everybody. Hey, Lawrence, appreciate it. Thank you very much. All right, everybody, enjoy yourself, enjoy the weekend, and look forward to seeing some folks in the room on Monday morning. Have a good one. I should point out, by the way, which I always forget to do, in the chat box, there's a link in the chat box to the specials that we just talked about here. If you want to just go in the chat box, you can click on those, and that will get you to the specials. I'll leave them up for a couple minutes. Hey, Lawrence, good. We'll see you there. Send a recording, Dave. Yeah, you'll get Rory will send you out a recording over the weekend once it's rendered. Okay, I'll leave this open for just a bit if anybody wants to click on the link so that they can look at the specials on there. Okay, have a great weekend.